And after the earnings jump, you have the post-earnings results. Okay, so like what happens after? Okay, after the news was released, the jump happened, etc. And so after, usually retail stocks that jumped up on market open, they might keep going up intraday in a bull market. Okay, so when the company does well and it's a retail stocks and the market is bull, people they want to spend their money. They want to make money. So they see, oh, it's making money. Boom, let's buy, guys. So everyone comes and everyone buys. Okay? And in the bear market, people they take their profits, they run away right away. And you will see, the first thing market open, boom, I'm taking my profits. So in a bear market, it's going to dip after market open. But in a bull market, it's going to keep going up. Again, it's statistics. Okay, don't forget the risk. Don't forget what I said about allocation. Okay, I'm looking at you. So don't forget. Okay, everything I'm saying, it's statistics. It works. Again, I'm giving tips, but there is a risk. This is a risk. And institutional stocks, they will behave the opposite way. Okay, so when they jump up, usually in a bull market, you will see it sell intraday. And in the bear market, when it jumps up, you will see it keep going up. So again, it depends on who is buying, how people react, etc. And again, it's statistics. So if you go all in on the first trade, or even on 5, and it's the same period where because of something changed, it's not going to work. Try over 1 year with a lot of small, just check it. Okay? So short term is not adapted for people who begin. I'm telling you more. If you don't know what you're doing, if you're small, think more long term. But you can learn and see how it goes over time. But you need to learn. Like nobody became. You don't get a six-pack without going to the gym. Okay? Like if you want it, you have to start. It doesn't build. You don't get a six-pack in 1 month by going to the gym. Okay? It takes time. So better start early. Now, post-earning risks. So when it dips, okay, I'm showing you the dip scenario, but it's the opposite way when it goes up. Okay, when it dips, please don't buy right away. Don't buy right away. Give yourself 20 minutes, especially if you go with options. Okay, there's no point because you come, you have a high gamma, the thing. I'm covering it in other videos, but the implied void is high. Plus, you have no liquidity, so it makes it even higher synthetically. So you come, your bid-ask spread is super wide. Plus the first 30 minutes, you have to send the market order if you trade options. So options, it's even worse. You can't put a limit order. The first 20 minutes, don't do anything. Okay, like if you take rush decisions, if you want put 0.1%, like just play it for fun, but don't do something serious. Like expect speculation. Okay, first 20 minutes. After that, usually it comes down and there is a pullback. So on auction, the auction price is going to be a big change. Why? Because everyone already sent orders prior to the auction. Okay, and after that, you usually see some momentum keep going, etc., and then it pulls back, it reverts back during the day. This is an average. Now it also depends on when the news was released. Okay, so after our news, it behaves like I told you before. Okay, it behaves like this because everyone already processed the news, and earnings are usually released after hours. But pre-market news, you can jump right away. Don't wait. Why are you waiting? No one processed it. No one sent orders prior to the auction. Okay, everyone is starting now. People that are learning about it. So it's going to move during the day. Okay, I have to look at you more. It's going to move during the day. Okay, so the pre-market news, don't wait 20 minutes. Okay, it's the only case where you don't have to wait. Okay, and when are they released for earnings? Because again, we're talking about earnings, but I'm giving general tips. Again, everything is risky. Don't forget about it and be very careful. And everything can change over time. It's just what I've noticed. Now, pre-earnings, pre-market earnings are released usually when we are afraid there is some market manipulation or something. Okay, so like when people, for GME it happened because they knew maybe the kitty whatever would try to make some news and something would go wrong. So so in this scenario, they decided to release earlier than expected, and it can also happen when there is some doubt, when there is some doubt about do some insiders know, was there some leak in the data? Is someone else going to know because some insider sold information or something? Okay, so in this scenario also there is pre-market news. They happen more, I think, in the UK than in the US, but anyways. And so here we covered the stock specific risk, but it's not done. There is also the peers one.